Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with a major EURUSD 10 Lao presents. The corrective cycle slowed down around the 1.0825 level. This was followed by a pullback stagnant phase characterized by a typical realignment of trading forces. On the 4-hour chart, the RSI is moving along the middle line of 50, indicating a stagnant phase. On the same chart, 2 of 3 moving averages of the alligator indicator intersect, indicating a slowdown in the downward cycle. The bearish movement will come into play if the price falls below the 1.0825 mark. In this scenario, there is a high probability of reaching the 1.0800, with an attempt to break through it. As for the bullish scenario, it considers the end of the corrective cycle relative to the current values, with a gradual increase in the volume of long positions. In this case, the price will gradually return to the values of the local high of the upward cycle. Complex indicator analysis indicates a stagnant phase in the short and intraday timeframes. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. The British pound is slightly rising from the support level at 1.2847. The Martin oscillator hovers around the zero line, indicating sideways movement. Traditionally, to confirm the direction of the trend, traders need to wait for the price to settle below a certain level. However, with the FOMC meeting approaching, the pair may immediately breach the support at 28.47, and the target would be 1.2755, and the MACD line is approaching it. A breach of this level, along with the MACD line, will be a final sign that the market has chosen a downward correction. Conversely, overcoming the resistance at 1.2989, which corresponds to the support from March-April 22, and the resistance from the July 2023 will be a sign of the medium-term growth. On the 4-hour chart, the price is consolidating above the support level of 1.2847. The Martin oscillator is starting to move sideways along the neutral zero line. The price showed progress below the balance indicator line, which indicates a bearish bias. In addition, the MACD line has turned downward, showing a short-term bearish trend. What about silver commodity asset? Arif Makmur has a trading plan. Although on the 4-hour chart, the silver commodity asset is in a sideways condition, but under seller pressure, as indicated by the EMA 20, which intersects below the EMA 50. But with the appearance of the deviation between the silver price movement and the MACD histogram indicator, it gives an indication that in the near future silver has the potential to be corrected to strengthening to the level of 29.40. And if this level is successfully broken upwards, silver will continue to strengthening to the level of 30.48. and if the momentum and volatility support it. But all of these strengthening correction scenarios will be invalid and cancelled by themselves if silver suddenly returns to its initial bias, especially if it breaks through below 27.38. That's all for today. See you online soon.